Hello and welcome back to Crypto Saving Experts, where we talk about the latest cryptocurrency news and take a look at the markets so that we all know exactly what is happening. My name is Jess and we do these live streams every single weekday. So if you are new here, please don't forget to like, subscribe and hit that bell notification button. Let's get straight into the price of Bitcoin now and see what's going on. We are up a whole 2% in the last 24 hours. I managed to buy some Bitcoin below that $29,000 level last night, so I'm very happy to wake up to this news this morning. Bitcoin is currently trading at $29,500, up 1% in the last week, 2% in the last 24 hours. And we also have seen a nice rise for Ethereum, up to 1,857, up 1.3% within the last 24 hours. And this change has been reflected across the board in all of the different altcoins here as well. You can see nice increases here for the majority of tokens. Yes, it's not a massive gain and it is following that move to the downside we did see within the last week, but it's still a gain, so it's still a win. Let's take a look at this. Is pretty interesting here actually. Before we move on, XRP in the last week has only seen a change of 0.23%, so we had that sharp increase to the upside for XRP when they won in court against the SEC, and then things have got really stagnant since then. If we take a look at the daily chart here quickly, let's see what this is saying. We had a nice big rise there and we've had a whole lot of sideways action for the last week. That's pretty disappointing. We have had the XRP army accumulating so much XRP within the last 3 years since that lawsuit started with the SEC. So I was hoping they'd get a bigger move for this. They deserve a bigger move than this. Maybe I'm thinking too short term in that. Maybe they will have more gains to come. But those guys have been accumulating XRP for so long. I wanted to see them have magical numbers there. But it is a high cap altcoin, and with that, they have less volatility in the markets. Anyway, that's a complete sidetrack there. Let's take a look at what's going on with the price of Bitcoin. Not what's on the price of Bitcoin, what's going on in the cryptocurrency news. We want to talk about Tether. Now, this is very, very interesting. So they declared a excess reserve of $3.3 billion. So this was released in its Q2 financials for the year of 2023. So its excess reserves continue to grow. Now, we have seen typically with Tether, when they have excess reserves, when they make excess profit, they do sometimes put some of that into Bitcoin. So are Tether pumping Bitcoin? Well, we did see Bitcoin rise pretty nicely yesterday. Let's refresh this page here. So Bitcoin, this is the 1 minute chart. We do not want to be looking at the 1 minute chart. On the hourly chart here, you can see Bitcoin was trading at around $28,800. And we suddenly saw a quick wick to the downside, all the way down to $28,600. And then we saw that massive rise back above $30,000 momentarily there as well. So we did see somebody was accumulating within these hours. Was it Tether? That's the question there. We have seen in previous stories before, Tether buys Bitcoin with a portion of its net profit to back USDT stablecoin. That's a story from May 17th this year. This is a story that we see pretty regularly. When Tether make profits, they do typically put some of that into Bitcoin, and that's a massive win there as well. So let's keep an eye on that. But one thing I would like to discuss here is Tether have blacklisted a scammer for stealing $20 million of USDT. So let's talk about this quickly. Before we do, please don't forget to like, subscribe, and hit that bell notification button so you don't miss the latest cryptocurrency news. What we have here is Tether blacklists zero transfer scammer over $20 million USDT theft. And now people on cryptocurrency Twitter are looking at this and saying, did you already expect this? Did you see this scam coming? Because they froze that wallet very, very quickly. So let's take a look at this. Tether have blacklisted a zero transfer scammer. So according to a recent tweet from blockchain security firm PeckShield, Tether was able to block the scammer and freeze the funds immediately after the transaction was successful to prevent a recurrence of the incident from the same address. On-chain data shows that the victim initially transferred $10 million received from a Binance account to a separate address before the scammer made a fake zero USDT token transfer from the victim's wallet to the phishing address. When the victim was ready to execute another transfer a few hours later, they sent 20 million USDT to the phishing address, thinking it was their target wallet. This intended address was this one, while the scammer's address was this one. So you can see there's a few discrepancies there. And Tether's quick action at freezing the wallet address has raised speculation on crypto Twitter. If they saw the scam coming, the concerns emerged due to the stablecoin issuer's track record of taking days to do the same for obvious hacks. So we can see here online sleuth, on-chain sleuth, Zach XBT, which is all over Twitter. Let's pull this up and see what he's had to say here. We need to just press this link. What we want to do is we want to go to Twitter here, Twitter. And we go to Zach XBT, right, Zach XBT, here we go. So let's see what he's had to say on the matter. Taking a look at this, my throat is very sore this morning. Let's see what we can find. There's lots of sleuthing going on here. Maybe it's in his replies. Let's see if he's been in the replies section. Let's see what he's got to say. Let's find it. While we look for this, please don't forget to like, subscribe, and hit the bell notification button. I can't find this on here. I'll try and find that and drop that into the chat in a little second. So what we can see here is they've blocked a scammer, essentially blacklisted them so they can no longer make transfers with their tokens. Let's move on to the next article here now. Let's see what's going on with FTX. We need to move on here. We should be talking about this. Now, FTX, obviously, we all know by now, filed for Chapter 11 bankruptcy in November last year. And then since then, they've been restructuring, trying to understand how they can move forward as a company. I would like to point out Chapter 11 bankruptcy is not just outright bankruptcy, shutting the company down. It's a way to restructure the internal goings of a company to try and relaunch. And what this is exactly what FTX have been doing here. So FTX's offshore exchange, FTX International, was hinted to go live again in the restructuring plan released by the team responsible for overseeing its bankruptcy proceedings. Now, this plan has raised a lot of questions, and it has shown that they are planning to leave FTT holders behind. Now, FTT is FTX's token. So it meant that if you held FTT, it's like any other token for exchanges. Many exchanges have their tokens. If you hold their tokens, you get lower transaction fees and all the rest of it. It brings benefits and has its utility on the centralized exchange. FTT holders do not benefit from this restructuring plan. Instead, what is going to happen here is that, well, this is what it says here. Holders of FTT will not receive any compensation for their token value loss since the exchange's bankruptcy, and FTT was severely affected by the ongoings last year, with the price dropping from roughly $22 to below $1 following the bankruptcy filing and as the events unfolded. So what we can see is what's going to happen is the claims are categorized into 13 distinct classes, and then NFT users will be reimbursed separately, and those who still hold NFTs will have them returned, except in cases of loss. In such situations, their claims would be placed in class 4A or 4B, as specified in the document. So what's going to happen here is they're looking to create an offshore exchange, one that is not available for US clients, and can relaunch the exchange essentially and start that again, building up from the bottom. But we do see here, as FTX as a company, they have the infrastructure for an exchange, they have the funds for an exchange, so I don't see any problem with them trying to relaunch this in a way and seeing how they can go with that. They have a profitable company there, it's just that the people internally were not organizing it in the correct way. So the reopening of FTX.com could be the injection of health the cryptocurrency market needs, with the potential for customers to regain access to their funds. A flood of capital could come into the market. So yeah, it's an interesting debate over what will happen to the people that lost their money in FTX. Will they want to stick around in the cryptocurrency market, or will they want to take a step back? Now, my question to you guys is FTX overall a good or bad thing for the cryptocurrency space? Now, I know everybody says any publicity is good publicity, but also we have seen the negative implications from this. We've seen a lot of people in mainstream media reporting on FTX and trying to paint the cryptocurrency industry in the bad light because of FTX. But has it brought an overall net positive to the space? I would say that FTX filing for Chapter 11 bankruptcy created a whole a more immediate need for transparency in the space. A lot of people are in cryptocurrency for the transparency, for the decentralization, and for all of those benefits. But before FTX, we weren't really focusing on those goals. But since FTX, we've seen many centralized exchanges do proof of reserves every month. We've seen the regulators try and crack down And obviously that's been very negative, but we've seen the regulators try and crack down on the cryptocurrency space. And a lot of people are pointing out, even though the regulators are doing this in the wrong way, we do need to be regulated in some way, because FTX should not have happened. And that is the job of the SEC, to make sure FTX does not happen again. And it was their job to make sure it didn't happen the first time. So although I'm not on board with how Gary Gensler is dealing with this situation at all, is this overall going to put us a step forward in this space? Potentially, because we all knew we needed to get regulated at some point, and this has been the trigger for them to realize we need to do something here, but we just need to make sure that regulation is correct. Overall, is this a net positive? We're seeing more transparency. We're seeing people store their funds in more secure ways, spending more time researching how they should secure their cryptocurrency and learning about self-custody. And we're seeing a huge focus on how the space can continue to move forwards, with regulation being involved in that. So it's really interesting there. And I do think, although a lot of people are against regulation, I think regulation of the cryptocurrency space is important. We can't just continue to be the Wild West forever. We are going to get regulated at some point. Everything Gary Gensler is doing is something I do not agree with at all, but it is a step in the direction of how we can gain mass adoption, and until we're regulated, that might hinder that growth. So let's continue on to the next article here and see what else is going on. So we have, let's see what we've got. Microstrategy adds 467 Bitcoin to their holding, bringing the company's total growth stack to 152,800 Bitcoins. That's a massive number of Bitcoins there. Saylor declared the recent price purchase came to $14.4 million, meaning the company bought the 467 Bitcoin at an average price of 30,835. MicroStrategy now holds an enormous amount of Bitcoin, 152,800 to be precise, representing approximately 0.78% of Bitcoin's circulating supply at the time of writing. So that's a massive, massive percentage there. In the official company statement, MicroStrategy broke down its Bitcoin financials, and they've said they've acquired 12,800 Bitcoin since Q1 for $361.4 million, or $28,233 per Bitcoin. So they are in a profit now, right now. They have an average price of $28,233. We all know the MicroStrategy have been accumulating Bitcoin throughout the highs, throughout the lows. Whatever Bitcoin does, they seem to be continuing to accumulate Bitcoin. This is what we like to see. They are the king of dollar cost averages. They know exactly how to do that. They just continue to push money into the asset. A lot of people are starting to get a little bit concerned over how far they are going to go with this. Are they going to be owning a huge percentage of the supply by in 10 years' time? But right now they are pushing for Bitcoin adoption. They are pushing for people to understand the power of dollar cost averaging, and that is something that I can get on board with and can praise, and I like to use that as a reason to push people to do some more research. Let's continue with the next article here and see what else is going on. So we have Consensus releases new smart contract checking tool. So Consensus has released a new smart contract checking tool to check contracts for flaws before their launch. Now, this is something that I think is really important. Also something that we need to be a little bit cautious about. We can't start relying heavily on tools like this. Yes, they can help us. Yes, they may speed up some processes, but we need to actually be auditing these contracts very, very consciously, because what we are seeing in the cryptocurrency space is problems like with what was the name of Anchor that had problems earlier this week. We keep seeing hacks in the cryptocurrency space, and it just is not good enough. We're seeing these hacks over and over again, and they seem to be this. I mean, this was a re-entrancy attack that we saw this week. That kind of attack is very, very simple, something that we are very, very aware of, and something that blockchain developers learn about very, very early in their career. This is the kind of, when you learn how to be a blockchain developer, how to understand Solidity and all the coding languages in cryptocurrency, you learn how to write them. You then learn how to make sure that your code cannot be exploited. And one of the very first hacks you learn about are re-entrancy hacks. Yet we've seen re-entrancy hacks again now. We keep seeing this over and over again. And it's very frustrating to see, because it pushes a lot of people away from the space. You can see that in cryptocurrency, we are still at the start of an industry. I get that. We are going to see some hacks because we're a new industry. We're growing at a very fast rate. However, these kind of hacks that we are continuing to see in the space are something that we should be growing past now. We should be moving on. And yes, there may be new hacks that we learn about, new flaws in the code that we learn about, and we are still learning the best practices for all these coding languages, but it's very, very frustrating to see that we are still seeing big problems, and I don't want us to completely rely on AI or any other checking tools to determine whether a smart contract is safe or not. We need to be learning from our mistakes in this space a whole lot more to continue to grow. There's a huge amount of projects out there, but how many of these have actually been through a whole process of creating a product that's actually useful and then having their contracts audited over and over again to make sure they are secure? We're in a space where we're trusting code with our finances, and if that is the case, we need to be very, very careful. And tools like this, yes, they are helpful. We also need to make sure that we are auditing everything in the correct way. Let's take a look at what else is going on in this space now, though. We have the Zest big thing is racing and esports. So the soon-to-be released Zest token will grant holders membership to the Veloce Media Group, a leading company promoting and supporting top motor racing athletes, esports teams, and sporting assets. If you're interested in this article, I will drop the link to this in the chat. But let's move on to the next one. Let's see what's going on here. James said it's called due diligence before launch. Coders that don't want to pay people like me stress testing their code as they are arrogant. What we need to, we need to stress test things as much as possible. We cannot continue to have a space where we are not learning from our mistakes when it comes to coding and understanding security of our smart contracts. It's very, very frustrating to see because it pushes a lot of people out of the industry, and that's not what we want. Let's continue on to the next one now. Grayscale and 5 others file for Ethereum Futures ETFs. 6 Ethereum Futures applications are now awaiting approval by the SEC. So 6 investment companies are back in the race to launch an Ethereum Futures ETF, despite the SEC previously issuing a warning on similar efforts in May. So people are pushing forwards here. We want to see big movements, and if all of these things start to get accepted, the industry is going to change forever. Let's continue on to the next piece, though. We have one last piece, and this is a really interesting one here. So the US government are now investigating Blackrock for Chinese investments. So what we are seeing here, obviously we all know by now, Blackrock is the biggest asset manager in the world. They manage $9 trillion worth of assets, and we can see that the US government has actually launched an investigation into them over their Chinese investments. We can see here, if you take a look at this article, Blackrock have said about this: the majority of our clients' investments in China are through index funds, and we are one of 16 asset managers currently offering US index funds investing in Chinese companies. So it has replied to this and made a comment over this, but we'll see how this plays out. Very interesting. I believe that nothing will come of this, but you never know. Let's take a look at the price of Bitcoin now and see what's going on here. So first of all, we are looking at the monthly chart here. This is the one indicator that I want to show you today, and that is the one that I've been talking about and getting excited about here for a very long time. If we go on to this chart, let's remove all of these lines. We don't need any of these. All we need to see today is the MACD. If we take a look at the MACD on the monthly chart, if I go to BTC USD, here quickly, you can see that if I drag this all out to the top, even better, so we get to here, you can see that every single time the MACD on the monthly chart has shown bullish divergence, it has been at a point in which the bear market is over and the bottom is in. And for July, we finally got a signal of bullish momentum on that MACD chart. So does that signal the bottom is in? Historically, it has done. And does that signal the bull market is beginning? Historically, it has done. Obviously, we have the COVID-19 pandemic here, which fluctuated and affected the markets massively. We do have anomalies that are possible to affect the markets in ways that we don't yet know about. Black swan events like this do occur and massively affect the markets. But overall, I think if we look at history and we look at this indicator, this is a very positive indicator to see right now. So all in all, it's been a pretty positive day with that nice move to the upside for Bitcoin, with that MACD ticking positive for the first time this year for the monthly chart for July, and for Ethereum seeing that nice move to the upside as well. So things are happy here, and what a nice Wednesday it is. But that's all we have for today. Thank you very much for tuning in. As always, please don't forget to like, subscribe, and hit that bell notification button, and I will see you all back here tomorrow. Goodbye. Goodbye.